So let's start very high level. How can language AI help with ESG investing or ESG integration? Let's just start high level. Maybe who wants to start with Ludovic to start with?
Okay. Well, to me, it's more a question of what does the industry needs now? Because when you look at what happened so far on the ESG scene, most of what we have seen was companies creating ratings like the MSCI Sustainalytics of the world. And fairly quickly, the limitation of these type of things were hit by investors because you lack that granularity and you lack the specificity that you would need to do things seriously. And so this is where, this is how at RavenPack we approach the problem, because we have this taxonomy of event that was mentioned pretty seriously today. And because we have this capacity of detecting very, very specific events, this is where we can create value, because what the industry needs at the moment is probably more granular data and data that is very, very specific and targeted towards something very, very specific.
And probably more timely as well, because the problem you have with the typical data set. Well, if I zoom out a little bit, I would say NLP is not just useful, but it's become indispensable because we live in the world of narratives. And not just we finance people. Finance has always been very reflexive activity. It's one thing to have a conviction, but you have to check what other people's convictions are. So it is reflective in nature. But especially when coming to sustainability related as opposed to ESG, politicians are also incredibly reflexive. They will only do what they think. And we live in such a complex world. There's no way any expert can prove that the solution has to be 23% hydrogen and 36% solar. We have no clue how much availability there will be and what will be the price when we keep extracting copper or lithium. Will that make sense economically? No one knows. And another very special, unique situation today is that although no one knows about how the transition will happen, everybody is forced to position. Right. In the past, there was no such thing. If you had no clue about a specific domain, you just don't touch it. But here you have to. So in this world where no one knows, but everybody has to position, and you know that politicians will take decisions that are extremely irreversible somehow, you really need to listen to the crowd and what everyone is saying. So just the last thing I would mention is that it also very much depends what you want to use NLP for, because the typical ESG implementation is about, I don't want to have anything to do with the bad guys. So I wait until there's a bad news hitting BP or hitting Volkswagen and as quickly as possible, they disappear from my portfolio. Well, you can do if you want, you can do that if you want to look good, but it's never going to bring you alpha. So if you want alpha, if you want to try to be positioning in a way that will help you create value for investors, it's much more difficult, and NLP alone is not sufficient, but it's an integrated part for the reason I was mentioning before.
So talking about finance, there's a lot of companies, ours included, that create sustainability feeds and ratings. And so when we talk about financial materiality and how those sustainability factors impact the financial performance of a company, how can NLP really extract that data or analyze it? Is that something that you follow?
For us, maybe I speak, it's really a matter of monitoring which topic is gaining traction. So it's not so much about is this company sustainable, because you will hear and listen or read text that says this company is doing a lot of effort. There's so much greenwashing going on that frankly it's completely useless probably to just read from the companies. But what can be quite useful is to know which companies are associated with whatever topic first, and it can be with polarity or without polarity. And to know which topic are gaining traction. And then the third layer, which is not easy to obtain with the current data source that we can look at, is also, is this topic gaining traction within people that make financial decisions already, like financial analysts at Goldman Sachs or Morgan Stanley, Or is it more something that is of general concern to the public, but hasn't really reached the sphere of people who make financial decisions? And here again, NLP is indispensable, but it's not sufficient. You need to, and it's logical, you need investors to also be given the data set out of which they are going to be able to make a decision according to this preference they would have for companies, for instance, that have a lower impact on biodiversity. Today, I don't have a data set for biodiversity, even though I know it's incredibly material, probably even more material than emissions. It's not financially material yet, because no one can position on that theme.
Yeah, well, as Pierre said, well, I think we will touch base on that later. I think at the root of the problem, it's an accounting issue more than a valuation issue, but we'll keep talking about that later. But from an NLP perspective, I agree that probably the best angle of using NLP is to fight greenwashing, because the NLP is good at capturing these kind of claims that companies would make, that they take these initiatives like setting targets or these sort of things, or contributing positively or negatively to whatever, mostly positively, I would say. But then if you cross-reference these types of claims with more specific data, like if you capture that a company is making a claim about a target, how realistic that claim is, then this is how you can gain an edge and actually achieve something more serious in terms of sustainability. Now, in terms of financial materiality, it's a bit complicated to answer the question, because that would depend a lot on where these companies operate. We actually have a paper on that, because when you detect these kind of events, so I'm going to answer the question through the taxonomy lens. When you detect an event, you see that the price reaction of a listed company, that would depend very much on where that company is listed. And for those of you who attended the lunch and learn session, I briefly mentioned that. If you take something like antitrust cases or copyright infringement, in the US, you don't find that there is a very strong price reaction to that, because the consumer regulation or the consumer protection in terms of regulation is not as aggressive as in Europe. But then if these types of events that do happen to companies in Europe, then the share price reaction is extremely negative. So it also depends on how the legal framework would be where these companies operate. So it's not exactly a question of NLP, it's a question of where would you capture where these companies would operate when you capture the event, if that makes sense?
Yeah. So you both mentioned greenwashing, and obviously that prominent discussion in the media. And so just sticking on that topic, we see it, say from a news organization side, we see it negative news moving the needle a lot quicker than positive news. So is greenwashing really, when it comes to analyzing funds and stuff, is it really that important to utilize NLP to kind of highlight, who, or trying to identify who's actually, greenwashing, is sort of way? Because we see that it only takes one or two negative stories to impact a sustainability of a company, rather than 4 or 5 or 6 positive news stories, to try to pull them out of that.
It's also related to the question, what you want to use NLP for, and what kind of an ESG person you're trying to be. So again, if you're more of an ethical ESG, I don't want to have anything to do with bad guys. I hate greenwashing, right? Because it's bad ethically, and I'm going on a crusade for that. But if you're concerned with alpha, you would almost say, what, those companies that are, for instance, Shell, is under a lot of pressure, is being sued for cutting oil production at the moment where we need more oil and there is no real policy to reduce oil demand. As a shareholder, I would say, well, of course they will do greenwashing. They don't want to shoot themselves in the foot. So again, it's very much depending on the angle you take. In terms of short-term reaction, longer-term reaction, positive, negative, you're right, probably, again, on the ethical side of things, you would say you will detect bad news and immediately reaction, not necessarily a huge reaction in price, and you need to be very fast if you want to make alpha out of that. Probably you make more alpha just playing the mean reversion, because obviously what the company will do, they will fire 1 or 2 guys, and then they will introduce a policy, and then it's a beautiful world. So I'm not sure actually as an investor, if you really think carefully how much of an impact you really have on society, if that's your way of integrating ESG. So I think it's much more powerful to look at structural trends, things that are slow moving, but they are somehow more interesting on the positive side, actually. Which are the technologies that are going to win? And trying to align your portfolio to be capturing the trends in terms of the energy transition, but also what will certainly at some point happen in the food system. And there was the vegan burger earlier on the screen. I mean, that's a very interesting area to watch.
Anything else?
I guess it's a bit of a simplification to just say that yes, it takes less negative news and positive news to move the prices. I guess it's not really something related to ESG or NLP or even anything in particular. I guess it's more a feature of how human people like to think about the rest of the world, because no one likes to think about negative things, and so it takes. From a reaction perspective, it's probably behaviorally more explained by this, if that makes sense. That like positive news would be the expectations of what business as usual looks like for a company. I don't know if I'm making a lot of sense here, but people would like to think that for a company it would be the business as usual to not be involved in any negative news. So when these negative news actually do happen, this is where you see like a break with the ongoing narrative, because this goes against the expectation that people have of that company. And so from a behavioral perspective, you see a more important reaction in terms of magnitude in the share price. I don't know if it's something that you agree with.
Certainly you can observe that. I'm saying from an alpha standpoint, we look at it, we try to take somehow advantage of it, but we think a more substantial, long-term sustainable process using NLP in relation with, and again, I don't like ESG acronym as much as I would say sustainability or transition. We are confronted with an absolutely existential threat. I mean, don't know how many of you know about the 9 planetary boundaries. 5 of them have been crossed already. I mean, it's just very simple. The law of nature are much stronger than the law of humans, and we're getting to the point where we are very close to a singularity moment. We'll have to adapt. So, I think yes, we're still under the old framework of if you have news, you react right away. But these structural trends are starting to become more and more powerful.
Should we be deploying NLP the same way we do in mainstream finance, the way we do in ESG? Should it be the same? Is it universal across both?
I mean, for what Ludovic described, certainly it's a sentiment, for each stock. I want to know if people are positive or negative on Tesla this morning or BP. Certainly play a role. But again, we tend not to think so much in terms of sentiment analysis, but much more in terms of emergence of topic, evidences of raising financial materiality. And you mentioned geography, is this in a place where regulators seem to be already starting to mention the topic or to draw attention to how material it could be, it could translate into fines, etc. But then again, more importantly, and it's not NLP alone, but you can combine it with network data. There was a question in a previous session where people were asking, what about private companies? Because a lot of the good news stuff happens with private company. Absolutely. And that's why you need to look at the entire network of companies, understand relationship. And NLP is a good ingredient because with NLP you can illuminate the network. So you have 100,000 companies, but only a fraction of them are associated with a particular topic. And then maybe you can detect within the network some companies that are not so much talked about. They're not in a basket of clean tech stock or etc. But actually they may be the picks and shovels of things that are emerging. So if you have reasons to believe that a certain topic is on the rise, because politicians start being driven to, hydrogen this way will give you the solution, then combining NLP with networks can help you identify names that you would never have thought of.
Do you think referring to, maybe this is Ludovic, referring to ESG is a good thing or a bad thing for finance? Because you talked about you'd prefer to call it sustainability rather than ESG. For years, for decades in the media, we reported on all three of them individually and separately. And so now it was only in the last couple of years that we've really, or the last few years, we've really aggregated it into a single topic. And do certain parts of that start to get forgotten about and missed? So there's obviously the environment, which is easy through disclosures to track, but then there's it's really hard to identify the social aspect with human trafficking or D&I and all these different things that are part of that. But in terms of, can we utilize NLP to pull some of that stuff out? Is it, what's your take on the actual theme of ESG versus just sustainability as a whole?
That's mostly a definition question, I would say, because from a sustainability perspective, what most people would refer to as ESG, I guess, is more touching on risk management, and then sustainability would also include things like impact. So sustainability is a much bigger thing than a traditional ESG. Now going back to the previous question, should we think of NLP as the same way we have thought about NLP in the world of finance? I don't think so. I think we need to be more specific and more careful in the way we create things, because sustainability topics, they are extremely specific, and they have a definition that is also extremely specific. So if you want to be able to capture that accurately, you need to be extremely careful. It's very easy from an NLP perspective to capture that a company has set a target. But then if you want to capture, is it a target that talks about scope 1, scope 2 or 3, or all of it, or what magnitude of that target, that becomes a much more complex problem. And this is what you would need in order to do things seriously, which is what Pierre was saying, that you would need to cross-reference these types of NLP extracted insights with other types of data set. And this is probably how NLP can add the most value, by cross-referencing what you extract from an NLP perspective with existing data sets. So if you take what you would find in a company disclosure, and then you cross-reference that with what the company is actually doing, but then that you would need to require like hard data, what I like to call hard data. Like if you find a target, you would need actual emissions, and then compare the trend of emissions, or do some specific research to see how serious that reduction target is. And it's not something that you can do with NLP per se, but then the NLP can give you the first, like the building blocks. We like to refer to things as building blocks, as Peter coined the terms a few years ago. You could use that as a building blocks to build a more complex way to approach things and a more complex answer. If that answers the question.
Just add, it's interesting, in most institutions, you have a separate ESG team. So it's almost like you have the E guy, the S guy, and the G guy, and each of them have to find their own stuff, But that's a way to look at the problem, which again is very ethically driven. But if you rather start from trying to use these notions as applicable to what you do as an investor, trying to find the right approach in selecting stocks and constructing a portfolio, with basically a view that externalities, some of them at least, will start getting priced in, because that's the only way for capitalism to survive. At least it will try to do some of that. Then you may end up with, okay, there's nothing in S that I can use, and why not? It looks very brutal, and of course it's not in real life as brutal as that, but rather than saying it has to be 1/3, 1/3, 1/3, which is why how these things has started, because it really started with people who hated capitalism and said capitalism brings a lot of harm to people and to planet, people as planet E. But once you take that from the investment angle, this disappears.
Do you is backtesting important in these themes, or do we just sort of take a leap of faith?
Yeah, there is a macro bet that these things will matter, that you should allocate. In fact, one of the way to check financial materiality is backtest. I mean, but more to confirm prior. We would have reason to believe that a certain theme, like for instance emissions, direct emission, would be more visible in the backtest for utilities, and more particularly in Europe. If we were to find the opposite, we'd say, okay, this clearly doesn't apply yet. So it's more to confirm priors. But for the rest, it is indeed a leap of faith. We can also check that the portion of the variance in price that can be attributed to any given factor is indeed starting to increase. We find that most of what we use is about halfway versus what the typical equity factors would already show. So I don't know if you can call it a backtest, but there's an element of leap of faith for sure.
Well, to me, it doesn't really make sense to backtest sustainability-related data sets, because even if you could backtest them, you would probably lack the economic rationale to do so. A lot of, I mean, that has been mentioned a few times today, that like a good data point that would need to fit an economic rationale. Like, why would you expect a company to perform nicely on that specific metric, like, or to outperform peers? And that's why I was saying like 10 minutes ago that in my sense it's an accounting issue, because the way we measure financial performance at the company level, it doesn't account for things like social capital or natural capital. So all the companies that would use these kind of resources negatively, they would get an outperformance, like financially speaking, out of that. But then that would not be something that you would be able to measure through balance sheet items. So historically, if it is something that has never been measured, why would you expect any alpha to come from these factors? And that's also what Pierre was saying, is that from taking a leap of faith perspective, specifically on the climate question, a lot of these things that we are trying to shield ourselves from, they've never happened before in human history. So how can you measure something that has never happened, and how can you measure something where you actually don't have the definition of what the target looks like in terms of a metric? Like, how would you measure that sort of things? So it's something, so that's why to me it doesn't really make sense to backtest these types of data set, because you don't have historically the economic system that would reward these companies. And also, even if you had the data, well, the data doesn't really exist prior to a certain point. So if you take carbon emissions, for example, which is a data set that has probably the longest history in that specific domain, you would get very, very patchy data pre-2011. So you would get history starting pretty much so you would have pretty much 10 years of data. And even when you look at the underlying data, there have been so many restatements of methodology, so many restatements of frameworks, that making the historical data consistent with itself is a huge challenge. So getting 10 years of historical data, but good data, that's already pretty much impossible. So why would you do a backtest on some data set that are completely irrelevant in that perspective? And that's why also I think there has been some kind of backlash towards ESG recently, because some companies, who shall remain nameless for legal purposes, have changed their models to make the backtest results look more appealing. But that doesn't really solve any of the problem that you're actually trying to solve. That's how you end up with Amazon, for example, having a very good score on the SPR, despite all the stories that you would get about the employees and all of these things. So no, backtesting to me doesn't make any sense.
Just maybe one thing on that. It's not necessarily sustainability or ESG that you could backtest financial performance of, but it could be the methodology that you backtest. You know, what if I'm using this network plus NLP and use those links, and I could have maybe tried the same with the digitalization of the economy when the internet appeared. But unfortunately, RavenPack doesn't have data coming, as far back as 1990. But
I think we have time for one more question. And so, we've got climate change, we've got institutions falling apart, we have greenwashing, we've talked about human rights issues. In your own words, how can finance save the world?
Well, I'm happy to answer first. So, save the world, I don't know, because I think it's more of a politically driven thing, and that's also probably why there is a strong backlash against ESG, because there is a very fine line between being a sustainability advocate and working a political agenda, and walking that line is very, very challenging at times. But from a financial perspective, it's pretty much the capital that drives the economy, and so by allocating the capital accordingly, you get to choose which project lives and which project doesn't live. So can the world of finance save the world? By itself, probably not. but it wields enormous power in doing so.
Yeah, it's very similar to what Ludovic just said. I mean, each time I have the opportunity, I urge my fellow, financiers to maybe think about dedicating a little fraction of the energy they spent on convincing, Shell to stop producing oil, to rather try to convince and lobby governments to create the conditions for a socially acceptable implementation of measures that would reduce the demand of oil. Because ultimately, that's now what's at stake, and there's a big risk that because, certainly if you had this conference 5 years ago, you would have seen much more attendance to an ESG. Still at the end of the conference because it's still somewhat on the fringe, but it was of no interest. But since then, something really nice happened. Everybody started getting interested, so people started, okay, maybe, I put a little toe in it and I buy a bit of the best ESG scored stuff or ESG ETF or whatever. And then they outperform, and then a lot of nice marketing around it. And so you ended up, especially aggravated with COVID, because it was very much tech related, actually you can do well by doing good. And that became sort of, even McKinsey came out with, anyway, you need to have a social license to exist. So it's the same thing, doing well and doing good becomes the same thing. And that's, of course, a completely naive narrative, but one that the governments were very happy to buy. Because we don't have anything to do, you guys fix it. So let's be realistic. And the response I often get is, oh, but we cannot lobby government, it's not our, but yes, every industry has always been lobbying government. So at least the pension funds, they're supposed to be in charge of balance sheet that have 30 years duration. So they should be the adults in the room. But they never ask us manager to be really doing things with a long-term horizon. If you underperform for 2 or 3 years, you're out. So I think we need adults in the room. We have pension funds that should play this role, and they should start being serious about lobbying governments as opposed to just lobbying companies.